might be sitting on a bunch of equity and potential opportunity. So what's happening right now is if you bought a couple years ago, maybe a few years ago, chances are your home's value has increased, maybe a lot, maybe a little, depends on when you bought. There's a lot of opportunity when to be able to review what's going on with your mortgage because you potentially could lower your payment. You could drop your private mortgage insurance or lower it a lot. If you bought with a conventional loan with 3% down, you might be at a 10% equity spot now, which could literally cut your PMI in third. So it even, and from that sense, it's like PMI is just straight interest. So we could potentially, instead of, reducing your rate from 7% to 6%, it's really more like 7.375% down to 6%, which makes a ton of sense. You could pull cash out for renovations, debt, investing, whatever you want. You could also refinance just about the rate. It could be just, hey, I want to get it lower, or you could lower the terms and cut 5-10 years off your mortgage. I did that 4 years ago. I went from a 30-year note down to a 15, and we were 5 years into paying. We cut 10 years off of our mortgage. So all that to say, it's really about just reviewing where you're at and making sure that it's strategy driven and not just about lowering the rate, because there's a lot of different things we can do, and there's opportunity inside the equity that you have in your house. So reach out if that is interesting to you, and if you just want to have a conversation.